Good evening, everybody, and welcome to Regent Business School. We're coming to you live from our campus in Johannesburg, Auckland Park, and we'll be covering our budget speech analysis program this evening with two very, very highly accomplished guests who I'll introduce shortly. I'm first going to do the very typical Zoom and Teams routine of giving people a bit of time to join us. Obviously, you know, given the time that we are starting, it is a bit sort of just out of courtesy, just allowing as many people as possible to join the call. And while we do so, for anybody who might be on the call already and joining us live on social media across various platforms, I'd like to invite you to join the conversation as we go through the next hour or so. In unpacking what the finance minister actually spoke about, because there's so much to digest, so much to really dissect to the nth level of analysis, and I think, you know, that for me is a big thing to make sure that today is a conversation. But I think, you know, without much further ado, let me formally welcome everybody to tonight's program. On behalf of everybody at Regent Business School, it's a great pleasure to welcome you. We are covering live from our library in the Johannesburg campus, Auckland Park, our budget speech analysis program. And we will be unpacking this speech, which was tabled in Parliament earlier this afternoon. And to help me do this, we've got, like I said, two very accomplished guests. One in studio with me is Mr. Nadir Token. Mr. Nadir Token is highly accomplished in his career. He's a senior asset management professional, and he's a markets commentator. A little bit of sort of brief history around Nadir's education. He's got a Bachelor of Economic Science degree as well as BCom Honours in Finance Management from the University of Witwatersrand. And thereafter he entered the asset management industry. Nadir's been in the asset management industry since 2011, and he's covered a number of roles during that time, from managing research analysis to investment strategy. He's also been a portfolio manager, an investment director, and a chief a chief investment officer. While during his career, you know, he's also had the prestige of winning several awards, including 3 Raging Bull Awards, as well as 2 Morningstar Awards. So Nadir has also written several market research pieces and investment commentary pieces over the course of his career. And he's now garnered 4 years of experience in leading portfolio management for both a global equity fund and a global multi-asset fund, and 9 years of total investment experience prior to taking on this role. So shortly after taking on this role, Nadir was approached by a large United States-based global firm, and he's now looking after some of the technical resources on the ground in South Africa for this particular organization. And that's obviously a highly impressive CV. So with that, I'd like to formally welcome Mr. Nadir Token. Nadir, thank you very much for your time and for being with us. I'm really looking forward to this evening's discussion.
Yeah, thanks so much for having me. Looking forward to it too.
Thanks so much. The second panelist, not to be outdone by any stretch of the imagination, we've got in our sort of unable to join us, unfortunately, in studio, but we've got Ms. Nomatibana Machoba, who's the MD and a senior portfolio manager at Terebinth Capital. Nomatibana is joining us via our Zoom link, and Nomatibana, like I say, is the managing director of a Cape Town-based boutique asset management firm, Terebinth Capital, and there she is the equity partner and senior portfolio manager. Part of her role, obviously, is to oversee the strategic direction of the business. She also has asset management responsibilities across fixed income product sets, including strategic and enhanced income bond and hedge mandates. She's got a wide range of experience in the financial industry, and she's also worked in the past at Catalyst Fund Managers, where she specialized in listed property analysis. Prior to the Catalyst, she was looking at strategic cash funds at Coronation Fund Managers, where she also held the responsibility in credit and general fixed income research. She also worked at the Old Mutual Group, most recently as a senior strategy analyst in the Old Mutual Emerging Markets team. Nomatibana has a Bachelor of Business Science degree with a major in Actuarial Science and is a CFA charter holder. She also holds a Master of Philosophy degree with a major in Mathematics of Finance from the University of Cape Town. Noma Tibana obviously looks after Terebinth Capital, which is wholly managed and is also majority female owned with a level 2 broad-based black economic empowerment status. With that, I'd like to formally welcome Noma Tibana in Cape Town for your time this evening and for joining us. I'm really looking forward to your contribution as well.
Thank you, Shaim, and I'm looking forward to this discussion.
Great, thanks. So Noma Tibana, I'm going to stay right there with you in Cape Town, and you know, I think a good place to start is your overall impression of what the Finance Minister spoke about this afternoon. What were the big ticket items that you took out, and what is your interpretation of the message that the Finance Minister conveyed, especially in the context of trying to promote and stimulate economic growth within South Africa?
Sure. So when it comes to the budget, we spend a lot of time analyzing and just assessing what could possibly come out from it. So, and we also spend some time with sell-side strategists to see basically what do they expect when it comes to the budget. So based on that, there's very little surprises that came from the budget when it came from the revenue numbers and also when it came to the expenditure numbers. So there was a revenue windfall that was expected, and that it came through. From an expenditure perspective, we were expecting to see an increase in expenditure coming from the COVID relief grants that the president did speak about at the SONA in terms of extending that. We did expect some form of support towards SOEs, although the language was very strict in terms of further support to them, but at the end of the day, something is being penciled in for them. And then we did expect some, not a decision per se when it comes to wages, because at the end of the day, there's still a court case pending. And then otherwise, when it comes to the overall consolidation framework, it's not surprised, given the MTBPS, that he spoke very strongly about ensuring that there's fiscal consolidation. And I guess the surprise then is that he's brought forward the expectation of us moving towards a primary surplus by 1 year, which is positive. Yeah. So I think in general, it was a budget where, from a numbers perspective, there was very little surprises. You mentioned growth. I mean, I do know that we'll probably expand on it further. I do think there was not much from that aspect in terms of growth measures that are surprises, if I put it that way, except for cutting taxes. But then we can debate about whether that is growth enhancing or not.
Absolutely. Thanks, Noma Tibana. I think your analysis is spot on in terms of, especially when you pointed out the issue of growth not necessarily coming to the fore in the way that many analysts might have wished for, and especially trying to create an environment which is conducive to investor confidence and to consumer spending. So I thank you for that, and I think there's so much in what you've introduced that we need to return back to. But Nadi, sort of your similar question, what were your outtakes from the budget speech, given the fact that growth might not have been discussed to the depth and length at which we all might have expected? And also, Noma Tibana spoke about the tax windfall from the commodity prices boom, and we will get into that in a lot more detail. But sort of your overall impression of the budget speech.
Yeah, so Shaim, I think the bottom line is that this budget was one for the markets, right? Yes. If you look at how the markets have reacted to it, the rand is incredibly stable. So, in fact, it strengthened at one point to close to under 15 rand to the dollar. And this is at a time when there's quite a lot of global risk-off sentiment. If you think about what's happening in Russia and Ukraine, yes. And you think about the Federal Reserve talking about increasing interest rates, those are pretty negative rand events. But yes. The rand is holding up very, very stable. And that's actually from the start of the year. And, the reason for that is because the market expected much better fiscal numbers. And that's exactly what Minister Godongwana presented. So really, as Noma Tibana mentioned, no surprise on that front. Yes. I think you're right that it was a little bit light on growth. But I mean, look, he doesn't have a task that one can envy, yes. Because the reality is that if he had to talk about more of a pro-growth language, so let's take the extreme circumstance. There's a lot of very, very credible financial market participants and economists Nouriel Rabini and Colin Coleman, who's the ex-managing partner of Goldman Sachs South Africa. Yeah, you're mentioning that, you know, in actual fact, if they see anything short of an 800 Rand COVID grant, they would consider that disappointing, because that's growth enhancing, right?
Exactly.
But the reality is that if you had to go to that extreme, you have to think about, okay, what would that would have misaligned all of the fiscal, all of the fiscal metrics, and people like Nomatibana as a fixed income portfolio manager would have been very upset by that. And, you know, we would have seen our bond yields selling off, you would have seen the Rand selling off. So I think, you know, it was light on growth.
Yes.
You did touch on the infrastructure PPPs, and, you know, we can delve into that in a lot more detail. But I think it was a tough balancing act, and, you know, it's about regaining the confidence and the trust of the market, you know. And the reality is, let's call it what it is. Financial market participants, asset management professionals, the South African population at large, their trust in government to be able to deliver on their promises at the moment is exceedingly low. You know, so I think you had to deal with some of the low-lying fruit in terms of consolidate the budget deficit. I mean, it's big numbers we're talking about. You know, we're talking about the primary surplus 1 year earlier. We're talking about the budget deficit of only 5.7% of GDP this year. That was unthinkable in the February budget last year. You know, so there were some positives to take out of it. The fact that we didn't get tax increases, in fact, some 5.5 billion Rand or so of tax relief, particularly on the fuel levy. So some of that will hopefully be growth enhancing. But I agree with you, a bit light on growth initiatives, and that's ultimately what gets us out of this problem. We have to grow our way out of this problem. We can't cut debt our way out. We can't cut spending our way out of this problem. We have to grow our way out of this problem.
Very well put, Nadir. And I think, you know what you've actually touched on very nicely is the fact that he's got such a tough balancing act, right? And given the fact that this is his maiden budget speech, I think in that particular respect, he conducted himself very well. I think that, you know, just his general mood, his body language, he was joking with members in parliament. He had a few light-hearted moments. In fact, there were a couple of times when he stumbled over himself, which was quite endearing in its own right anyway, right? But I think that, Nomatibana, you know, what Nadir has really put on the table is a discussion around balancing several interests in a way that actually still gets the job done. And it's something, to your point, that we need to go into in a lot more detail. Before we do that, to the listeners out there and to the viewers out there, I'd like to invite you to participate in this conversation. I'd like you to be part of it in a way that actually allows you or affords you the opportunity to share your concerns or your outtakes of what the budget speech means, right? To that point and to that end, we are setting up a poll online, especially, well, it would be on the Zoom polling functionality. I'd invite you to participate and complete that poll. There are only 3 questions on there. I'll quickly run through them. So the one question that we're asking is, do you think that the finance minister has delivered a budget speech that will stimulate economic growth in the country? And there's a scale from saying 1 being strongly disagree, 2 being disagree, 3 being neutral, 4 being agree, and 5 being strongly disagree. So that's the first question. The second question on the poll is, consider the following statement. A special wealth tax should be imposed on the top 1% of richest South Africans. And again, it's a very similar scale. Number 1, strongly disagree, 2 disagree, 3 neutral, 4 agree, and 5 strongly agree. The third polling question would be, how do you think unemployment should be addressed in South Africa? And you've got 5 options there. Number 1, invest in micro enterprises and entrepreneurship. That should be increased, right? Number 2, labor legislation should be amended to encourage further employment. Number 3, corporations should set their own targets and milestones for increasing employment over the next 10 years. Number 4, education should be made free in South Africa so that more qualified people are able to find employment or become self-employed. And then the last option is the government should position South Africa as a technology hub, and that will create new industries aligned to the 4th industrial revolution. So please participate in that poll, and we will discuss the results of that poll a little later in the show. But let's sort of get back to the actual meat and bones of the actual budget speech. Nomatibana, sort of coming back to the issue of economic growth, it's so important. So you'll probably find that that's something I throw out repeatedly during the discussion, right? We're saying that, yeah, he might not have gone far enough in terms of addressing economic growth in a very concrete way, and it might be woven into several of the initiatives that he had discussed. But Is the plan enough? And what are the levers that we can pull on as South Africans to drive that economic growth going forward?
So it's actually interesting as you are listing all those options around growth. The bulk of them are outside National Treasury.
Yes.
That's the honest truth. They are sitting in departments that are where National Treasury will get their budgets, and then they assess whether they actually will give them the financing or not. So I think as South Africans, we need to understand that there's so many limitations that the National Treasury can do. So much of these growth enhancing policies in terms of coming up with them and implementation sits outside of National Treasury. They oversee from a budgeting perspective.
Yes.
But otherwise, I mean, if I look at the numbers currently, what he's done in terms of cutting taxes, because essentially what he's done, if we just go back of how he was able to not cut taxes, but because the tax cut is mostly on the corporate side, more the relief that we've gotten from certain taxes is really around using some of the windfall that we've gotten instead of using it towards expenditure. Is basically said, okay, let's take a pause on certain taxes.
Yes.
A portion of it has been used towards expenditure. So the relief would in theory then ensure that people are able to spend more, and that should be enhancing from a consumption perspective. So that's one thing that it is in his control to do.
Yes.
And I do think the announcement around the cutting of corporate taxes, obviously depending on what corporates do with that excess money, could potentially make its way into production, into the economy, and that could be growth enhancing.
Absolutely. And Nomadibana, again, 100% correct in the sense that, you know, that the corporate tax, or rather the tax windfall and the tax revenue windfall that was experienced, which was not budgeted for in the previous budget speech, for somebody who might have missed the actual budget speech itself, you know, the commodity prices during the last year have actually seen a boom, and which has resulted in 182 billion rand in excess revenue, which was not budgeted for. And so that's the context around Nomatibana's point around what happens with that. How are we able to enjoy relief mentioned by the finance minister, and how does that move us forward? Nadir, bringing you back into the conversation, we've got the tax windfall, right? Unexpected as it may be. So many options that the finance minister has at his disposal to what do you do with that money? Do you put it back into a population that has experienced immense financial difficulty and continues to experience that? Do you sort of hand out the cherry and say, here you go, there's a bit of relief? The option to address government debt, and more specifically SOE debt in the form of Eskom, that 182 billion could knock a substantial chunk out of the national debt, which would allow us to experience even more sort of structural relief as time goes on. Your sentiment around what should actually have happened with that 182 billion based on what the finance minister has said?
Yeah. So I think, first of all, what it has gone to, the majority of it has gone to actually just improving the fiscal metrics, right?
Yes.
So debt to GDP is stabilizing at just above 75%. That was projected to go to at one point over 85%,
Correct.
right? The budget deficit, we're going to get a primary surplus a year earlier,
Yes.
and our budget deficit is narrowing. So it's very clear what they've chosen to do with that windfall is improve the fiscal metrics and to a lesser extent extend the COVID grant, right?
Yes.
So I mean, let's just chat about that for a moment.
Yes.
The extension of the COVID grant is coming at a cost of about 44 billion rand to the fiscus, right?
Sure.
And obviously it's a 182 billion rand windfall that we got. I mean, just to put some numbers into context of just how strong this windfall has been. So Kumba Iron Ore announced results earlier this week.
Yes.
For those viewers who don't know what they do, they're basically an iron ore miner. So they own the Sishen. One of their big assets is the Sishen mine in the Northern Cape. They essentially mine iron ore, and iron ore is the key ingredient that you use in manufacturing steel.
Correct.
So iron ore prices have been at bumper levels, in fact increased to $160 a ton at one point this year. And Kumba Iron Ore found themselves in a position where they actually paid 21 billion rand in taxes this year alone. So we're talking about just one mining company's
Yes.
tax revenue is paying for literally half of the extension of the COVID grant.
Correct.
So I mean, these were not numbers to scoff at, and
Yes.
you know, 182 billion is a big number.
Yes.
So in terms of what he should have done with that money, I mean, from a personal perspective, I think there could have been a bit more of growth-enhancing measures that could have taken.
Yes.
And essentially, the argument that's made is that debt to GDP, debt will take care of itself if you grow the economy.
Correct.
So the reality is that if you're increasing the growth number faster than the debt number is going up, your debt to GDP ratio goes down in any event.
Absolutely.
Right? So to South Africans that are in trouble, potentially, he could have provided more growth enhancing measures.
Yes.
Potentially that could have used to repay some of Eskom's big debt. But remember, then you create moral hazard, right?
Yes.
So the big problem they have at the moment is that if they don't give the state-owned entities tough love,
Yes.
we're going to find ourselves in exactly the same position in 5 or 10 years' time, right?
Definitely.
So perhaps not, paying down a significant chunk of SOE debt. Perhaps we could
Yes.
have increased the grant. Perhaps we could have, brought on the discussion table the basic income grant. I know that's very unpopular in our industry at the moment because
Definitely.
of what that means for the fiscal metrics. But, from a personal perspective, I think there could have been a bit more growth-enhancing measures on that. He chose the more conservative route of to gain the trust and gain the credibility of financial markets,
Yes.
keep our borrowing costs in check because, it is the third fastest growing line item on the budget.
Yes.
We're spending more on servicing debt than we're spending on policing, on education, and on healthcare. I mean, that's a scary number.
There's a number thrown around about 90 million rand a day.
900 million rand,
Wow.
900 million rand a day that we're paying just on servicing our debt costs. So you understand the difficult position he's in, that, if he says the wrong thing and, our fiscal metrics go out of kilter and the market punishes that and our yields go up more,
Yes.
especially in an environment where interest rates are going higher, that just chows up more and more of the budget, basically.
Exactly.
So he is in a difficult position. We can sit here as an armchair critic and say he should have had more growth-enhancing measures,
Yes.
but it's a difficult balancing act given how closely the markets are watching what he's doing and given that the basically the financial trajectory South Africa has been on for the better part of a decade now.
No, 100%. I'm reading into what you're saying, that there's a difference between reality and perception. And remember, the lay South African is basically fed information through the media,
Yeah.
and you sort of formulate opinions on your own, and then you share it with colleagues at work, or you share it around, braais on the weekend and whatever else. And all of a sudden, the negative perception of what goes on within government structures and what happens to our public finances, the negative perception sort of just escalates and it exponentially gets worse. So the difference between the reality and the actual perception is an important point. If you had not given the example of sort of, iron ore and the price of iron ore and the tax revenue that is actually generated from one organization in one particular area of the country, potentially looking after half of the COVID relief, if that information is available at the water coolers around South Africa and around the braai stands of South Africa, it now changes the narrative somewhat. Because no longer do you think, well, shucks, 44 billion rand is so much of money. Actually, in the context, for you and I, it might be a lot of money, but in the context of the money available in South Africa and available to government for expenditure, it's not that much. And so it brings me to another point around perception. So I'd like to throw this question now to you, Nomatibana. I think, if we talk about perception and we talk about the loan that South Africa has taken from the World Bank sort of sometime last year, and there's been a lot of debate around whether it was necessary, whether it was a required loan, and the amount that was actually borrowed. The perception in many South Africans' mind is that that's going to ruin the South African economy. And I think it's important for us to contextualize that in relation to the broader size of the economy and it not being as big. But your thoughts on the World Bank loan that South Africa has taken on in the context of the budget speech and the current economic conditions, Nomatibana?
Okay. If you don't mind, can I just jump in and make a comment around perceptions? Because I think that's quite important, because the example you made is really around the quantum of these expenditures and how they may not be big when you think about it from a national budget perspective. But I think it's also important for us to just remember, at the end of the day, as Nadia also said, South Africa has a growth problem. And the growth problem is going to be sorted by policy changes that are happening outside of National Treasury. At National Treasury, level where we are sitting with a debt problem, and the debt problem becomes bigger while we're running a budget deficit.
Yes.
That budget deficit needs to be funded. So the reason that the National Treasury needs to be conservative in some aspects is because if we are not, then the cost of funding that, just from an interest rate perspective, increases.
Yes.
And you see it what's happening in the bond market. So making sure that the budget is investor friendly is not because of protecting a few asset managers. It's really around that cost to funding, to fund that big budget. Because while we are running a budget deficit, that big amount must be funded at an interest rate. Currently, it's at the back end, it's around 10%. So you can imagine that cost of funding makes its way, it keeps piling up into the overall debt numbers over time. So I think that's just something I needed to highlight when it comes to the perception issues. And then the World Bank loan coming into play. So if I just look at the funding picture for South Africa, or what was communicated at this budget, you'll see that compared to the medium term, the MTBPS, and now the amount of long-term loans that were issued were less. And the reason we're able to do that is because really of the fact that from a foreign loan perspective, that was a big number that came through and was able to fund the deficit that we needed. So my thing is, this is at a reasonable cost. We are funding at close to 10% when we look at those longer dated bonds. And obviously National Treasury, the Treasury team it's a balancing act for them. They can't just fund short dated instruments because then they have a refinancing problem, a maturity problem. Yes. They have to go to the back end. But at the back end, you're funding at like 10%. So therefore, now when you bring in foreign loans, the loans are in dollars. Yes, you are funding at a dollar rate. It's obviously at a rate that's lower than what South Africa is funding at. So someone would say, obviously, you are faced with the currency risk. But National Treasury does have measures to hedge that currency exposure. And that is also, they're assisted by the SARB. So I think from a cost of funding perspective, it may not come from the World Bank per se, but looking at foreign loans is something that we should not be, or otherwise looking at other DFIs while they are interested in giving us funding is not necessarily something we should be frowning against from a cost of funding perspective.
Sure. So I think Nomatibana, as you're talking, it makes so much sense and so many things fall into place from a perception point of view. And I think, one of the things we should consider, perhaps maybe for a future discussion and a future panel, is around what should the lay South African expect out of a budget speech? Because to your point, so much of what bothers South Africans and so much of what impacts South Africans on a daily basis does not necessarily reside in the National Treasury mandate or in the National Treasury scope of work. And so if you don't know that, when you hear the term budget speech, you're thinking as a South African, I'm going to be told in this hour or two from the finance minister exactly what he is doing and what his department and his portfolio is doing. And it might be that, a discussion or discourse around what the budget speech actually represents and who's the actual intended audience for that. Is it really intended for the layperson? If so, maybe there should be some kind of a relook in terms of how that gets positioned to the average South African. So that's point number one. Point number two, around the cost of debt and the cost of finance, for example, the World Bank loan, right? I think your point is so valid insofar as what we would normally get from a loan perspective in other financial instruments and other ways of securing innovative finance. The World Bank loan should not necessarily be looked upon as inherently bad or inherently good. It should be looked upon as a means of securing money for South Africa. And at the time, it was meant for COVID-19 relief. And now to bring you back into the conversation, the idea of COVID-19 grants, the idea of securing money to promote people who have suffered financial losses due to loss of income, businesses who had shut down during level 5 lockdown, and so forth and so forth. It's important to understand that, yes, the number may seem a lot. Yes, it's in dollar terms that we've secured X amount of money from the World Bank. But your views on the actual meat and bones and the actual essence of that loan and what it means for the average South African.
Yeah. So first of all, I agree 100% with what Nomatibana said, is that, if the cost of this funding is a fraction of the cost of the funding that South Africa can fund at over the long term, that should be, it should be looked at as a positive thing. Like you said, it shouldn't be inherently good or inherently bad.
Yes.
It should be looked at a tool within the toolkit for South Africa to support its economy. And,
sure.
If your default position is just that this loan is bad because it comes from the World Bank,
yes.
and that means that they're bailing us out and
yes.
it comes with conditions, that's not necessarily the way to look at it. I mean, just to contextualize some of the numbers as well. So the World Bank loan was around $750 million US.
Yes.
So around 12 billion rand,
yes.
right? So in the context of South Africa's 4 trillion rand of debt,
yes.
it's fairly evident that 12 billion rand is not going to make us, or it's not going to break
Correct.
us. It's a mechanism for negotiating with international DFIs
yes.
to be able to fund South Africa at a very low interest rate in an environment where the economy has been underperforming because of an external shock such as COVID-19.
Correct.
So and the other thing that the World Bank loan comes with, it comes with stringent conditions in terms of how that money could be spent, and the World Bank holding national treasury and holding government accountable for how that money is spent.
Yes.
So, is that the worst thing in the world? Probably not. So, I think the bottom line is that the stigma around the fact that it's money coming from the World Bank should be removed.
Yes.
And it should just be viewed through a practical lens of, at the end of the day, South Africa has a budget deficit that it needs to fund,
yes.
and what is the most efficient means, or the most cost efficient means of funding that.
Yes.
And essentially by broadening your borrower base,
yes.
or rather your lender base,
yes.
That essentially should be viewed within a positive context rather than just a negative context.
No, absolutely. And I think the point you're making around sort of how do we hold South Africa as a nation to account for the money that's being made available via the World Bank, and the stringent measures being put in place and conditions being imposed by the World Bank itself that says, yes, we are aware that there's a state capture commission going on, because we are aware that corruption's been an issue in South Africa for such a long time structurally. So we're not just giving money out nilly-willy for it to be spent in any old how. It's something I'd like to unpack a bit further with yourself and Nomatibana, but at this point in time, I'd just like to talk a little bit about the results of our poll, right? So I'm just going to let it come back up on screen. And actually, what's transpired from our poll is, sorry, I'm just battling to get the poll results. It's not coming up on my screen. I'm just gonna, while we're waiting for our technical team to just assist us with the results of the poll, Andrew, we've got somebody on the line by the name of Andrew. Andrew's got a question, and I think he's going to be unmuted. And Andrew, you just please just give a brief introduction, just your name and where you're from, and go ahead with your question, Andrew.
Lovely. Thank you, Dr. Patel. So my name's Andrew. I'm from Durban. I'm very much a layperson when it comes to the finance, but the loan from the World Bank, this is where I'm a little bit interested in. So obviously you've already touched on the idea that this is to help service relief COVID and so on. So that provides a little bit of background as to why we needed to take out such a large loan. And as you've already mentioned as well, in the grand scheme of things, even if it's so many million, in the grand scheme of how much debt is actually owed, it's almost like a drop in the ocean. But going forward, how much of that loan that we've taken will actually impact the ordinary South African? So I mean, that COVID grant is not all that big. Is it something that's worthwhile? So how much benefit will the average South African actually see coming out of this loan from the World Bank?
Thank you, Andrew, very much from Durban for that question. And I think, you know what, we probably need to discuss, Nadir and Nomatibana, a little bit about what is meant by the average South African. Because the context of the World Bank loan was to provide some form of relief for COVID-19, as we've said, but everybody was impacted by COVID-19 and its effects, right? So throughout, people talk about inequality so often, and throughout the spectrum of inequality, there were very few people who were fully safeguarded from the effects of COVID-19. So I think the question, to phrase it slightly differently, is who exactly were the intended beneficiaries of that particular loan? And perhaps maybe to take that question slightly further if possible, how do we ensure that the intended beneficiaries are indeed going to enjoy that benefit? Maybe let's start with Nadir and then we'll come to Nomatibana after that.
Yeah, so the intended, I mean, let's give some more statistics here, right? The reality is that 46% of South Africans are receiving some kind of a social grant.
Correct.
I mean, that's obviously a massive
Aside
number.
from the COVID-19 grant.
Aside
right?
from, yeah, so 46% of South Africans are receiving some form of a grant in South Africa today. Now, you know, when you've got an unemployment rate which by its expanded definition is above 40%, you know, and then you have COVID lockdowns, clearly that is impacting a big chunk of your population. So, you know, the reality is you've now got this big chunk of your population who are at home, not earning an income, struggling to make ends meet. That is ultimately who the end beneficiaries of these sort of loans are for. It's part of the temporary relief program as a result of the COVID pandemic. And if you look at what developed markets, as an example, were able to do, well, all the US did is that the Federal Reserve basically just increased their budget deficit. Remember that the dollar is a reserve currency and they're borrowing at under 2% over 10 years, right? So they just printed a heck of a lot of money. They increased their budget deficit and they basically mailed people checks in the mail to go spend. Now, clearly
quite a considerable amount of money.
That's right. And in fact, to break down the numbers, the median wage of the US household actually went up during COVID because the grants were just that big. So the reality is that South Africa didn't have that luxury. So, you know, the World Bank loan and a lot of other DFIs put funding mechanisms in place to be able to assist nations such as South Africa that don't have the luxury of being able to just go to the printing press or ramp up the budget deficit and help out their population. So that was the intended, that was the intention of the assistance of this loan. Now, obviously, as we mentioned, 12 billion rand is not sufficient to take care of that entire problem. But there is a mismatch, you know, in that National Treasury can't also take on too much dollar-denominated debt because, you know, that presents a risk to our reserves. It presents a risk to our long-term funding plan. So ultimately, it was supposed to be an assistance for essentially the entire population was affected by COVID, and you know where the government needed additional support because of declining tax revenues, because businesses are in trouble, because employment is down. So it was essentially meant to be some sort of a cushion for the overall economy and the average South African. And you know, the fact that we are able to have this COVID grant. Remember, at the time when the negotiations with the World Bank were going on, we had no idea that we're going to get this 182 billion rand windfall, right? So the fact these negotiations were important in terms of saying, well, we've got to give our population some money. How do we fund it when economic growth is so low? And that's really the background to it.
I fully hear you, Nadir. So really, it's not a case of a particular segment within the population that was expressly identified as being the beneficiary of the World Bank loan. It was more a case of saying that South Africa as a nation, as a whole, requires help, requires relief. And the government's efforts, again, to your point, prior to the 182 billion tax windfall, having not known that might materialize or not materialize in the form that it has, something needed to be done, and the money was secured via the World Bank, to your point, as part of a broader toolkit to manage the economy, to ensure that we don't suffer a complete meltdown of the economy because of the effects of COVID-19. Is that a fair way of summarizing your view?
100%.
Great. Nomatibana, question to you now. Andrew in Durban has asked a question. We're spending a bit of time talking about the World Bank loan, and I'm going to move away from it fairly shortly. But just in a minute or two, your advice or your sort of answer to Andrew's question in a minute or two, just from your side, Nomatibana.
I think it was well covered. So I'll pretty much be repeating some of the stuff that were covered when it comes to responding to the World Bank loan. But I do think that just to add around the point around monitoring of the use, that's actually important. It's not really a bad thing. And people shouldn't think of it as a bad thing, especially given all the cases, as you mentioned, around corruption and the state capture, it's not a bad thing for us to have that additional check on us.
Yes.
So that is one thing that I'll just rehash on, if I put it that way.
Okay, thank you, Nomatibana. You know what, I was hoping to move fully away from the issue of the World Bank loan, but I've got a question on the chat, or rather, yeah, it is a question from Ronald Blom. Floyd Shibambu today vilified the World Bank loan. What are your views on that? He said it keeps South Africans in debt with those whose only interest is to keep us locked into a materialistic world where the developed world can dump their products on us. Again, a minute either way. Nadir, your response, without turning it into a political discussion, your high-level response to Floyd Shibambu's views that were expressed today.
Yeah, so I think we're conflating issues here, right? And I think I think potentially there's conflating of issues deliberately to push a political agenda, right?
Yes.
What happens with trade policy and what happens in terms of funding a budget deficit
things.
are two separate issues altogether. So I think it's important not to use political agendas and conflate issues to progress a political agenda. And I mean, those are two separate things, and I think we've dealt in detail with what the merits are of funding a budget deficit through multiple sources.
Yes.
And the one point I'll make is don't conflate trade policy with how we fund a budget deficit. They're two separate things.
100%. Nomatibana, your view in summary on Floyd, if any views on Floyd Shibambu's opinion today?
It's no additional view or addition to the comment that's been made. This is really about analyzing the budget. I do recall that as part of the World Bank loan, one of the support measures that needed to be introduced was around the vaccine drive, supporting the vaccine drive. So probably that is where the comment of him, or the comment he made around the developed markets pushing certain products into emerging markets would come from. But in any case, if you look at what we've spent in South Africa on those vaccines relative to the actual loan, the loan is a fraction compared to what we've paid.
Definitely.
And also the amount of support that we've made, it's a fraction. So with or without that loan, we were dealing with an economy or a world where vaccination was being pushed. It was a policy and a drive that was being pushed. So whether we got that loan or not, we would have gone down that path.
Definitely. Nomatibana, you know what, the comments on social media as well as on the chat are coming in thick and fast. So I think you've really summarized that point very well. Let me just return. There's a comment on the chat from Aaron Sewu. I hope I've got that right. Apologies if I haven't. In your view, is the budget speech able to address the socio-economic challenges affecting the country without borrowing from the IMF or the World Bank? Nadir, World Bank is done, right? We've labored the point, but I think the essence of this question is actually quite valid, because you made the point earlier that as a proportion of our broader 1.odd trillion economy, the size of this loan is not really that significant, which would imply that we could have gotten away with this loan in any way, in any instance anyway, right?
Yeah. So look, I mean, the socio-economic narrative and so let's park aside the IMF and the World Bank. The socio-economic narrative and dealing with the socio-economic issues in South Africa, I think that's the point we made at the start of the conversation, that perhaps the budget was a bit light on how do we boost economic growth, because the way we get out of the socio-economic mess we are in is growing our way out of this mess. Let's be very clear about it. That is the only way we get out of this mess. So so within the context of a budget speech, what can the finance minister do? Well, government can create policy certainty, government can try and encourage investment, and government can try and manage their finances as best possible and provide support to the population within a context of fiscal sustainability. Those are the four things that government can do with regards to growth. So let's talk about policy certainty. In fact, we touched on Kumba Iron Ore's results a little bit earlier on. Ironically, the CEO of Kumba Iron Ore and the CEO of Amplats have both announced results this week for the year, have both said that there's a lot more policy certainty coming out of government with regards to the mining sector, and they are likely to continue. They are likely to continue to invest.
So the environment is now more conducive to economic activity.
Yeah. So we really come from an environment of a decade plus of economic malaise and massive harm and damage done to the economy, and trying to regain that trust of the private sector. I mean, President Ramaphosa alluded to it at the SONA as well, that at the end of the day, it's the private sector that's going to create jobs, and it's the private sector that has to invest. So government can create that conducive environment for investment. So Minister Godongwana, to his defense, did touch on combating corruption and where they are with that, and he alluded to a couple of examples of liquidating businesses that are committed tax fraud and in the tobacco industry, etc. So creating these prosecutions that help create an enabling environment for investment, that's what government can ultimately do. And providing the social grants and extending it within fiscal sustainability, that's what government can do. The next step has to come from the private sector actually seeing a rate of return that they can achieve on investment and unlocking that to unlock economic growth. And I think that's really the next big leap that needs to happen, is that does the trust exist within the private sector to unlock the level of investment that is required to generate or to generate sustainable economic growth?
100%. Nari, you've once again hit the nail firmly on the head, and it ties in very nicely with some more of the comments that are coming through on social media as well as the chat. Question from Matsamela Molepo. Do you think the South African government should stop the 350 Rand grant, or by then it would have created some jobs to unemployed? I'm sure there's just a typo there, but I think the essence is around stopping the grant, the 350 Rand grant, perhaps we could frame the answer, Nomatibana, a little bit broader than the specific example, but talking about grants in general. And, the risk, I know some commentators and analysts talk about the risk of falling into a welfare state, because Nadir had mentioned 46% of South Africans enjoy, or rather receive, some form of grant outside of the COVID-19 grant. So perhaps maybe we could answer this question, maybe at a more structural level, around what is your approach or your opinion on how government should manage issuing and providing grants to South Africans?
So the issue of grants in the South African context, or in an emerging market, I mean, South Africa has one of the biggest social welfare system. It is important because we understand that there's people that are below the poverty line, and there needs to be support measures to it. The obvious questions that's been floated around, and I don't want to passion the numbers, is really about how much that social welfare is growing. And the COVID or the social relief grant or the COVID grant that's been introduced is a way of actually adding to that social support. So that's the main concern. And in any case, when it comes to the social grants, for me, it's a way, this is how I see it, this is a way where government has actually failed and they've given up. Because at the end of the day, when you have a child, if you remove a child out of that poverty trap, because I understand that if someone is born into that poverty trap, once they move out of it through a combination of education and job creation did not come from government, it can also come from the private sector, which is something we're starting to hear them mentioning more, and it's quite important. Then you start removing that dependency on the government. This is what the social welfare system should be aimed at. And currently, it seems like, if you think about it, from someone who's born from age 0 up until they're at working age and retirement, the social welfare seems to have no end, and it should have an end, in the sense that you have support measures while someone is stuck in that poverty spiral. And then after that, through education and job creation, the aim is to gradually move them out of it. So that is my main comment around social grants, in the sense that it should be shrinking. That budget should be shrinking over time.
Yes.
Since it was introduced, to demonstrate success around it, because I hear politicians talk about the fact that how many people are being covered. Over time, in order for them to demonstrate success, is to actually demonstrate that the amount of people through policy measures, policy ensuring that there's a good environment for companies to thrive, that support is actually going down. That for me would be a success measure for social welfare in the country.
Yeah. So what I'm hearing you say there, Nomatibana, is a plan that needs to have been articulated at some point in time that says, listen, we've got X amount of people living below the poverty line. Using these finances that we've got available, we are going to lift them up one level by a particular point in time, and by a further particular point in time, they'll be lifted another level, and so forth, such that to a point in time where the number of people living beneath or below the poverty line decreases, and hopefully even in an ideal utopian world, there's nobody living there. And that really, for me...
So, and exactly your point. And the only way you're going to get that is if you actually... And then we're moving now around job creation, because then once you move out the social welfare, if you have the sufficient economic resources to actually support yourself, you should be outside of that. And that involves creating an environment where companies can thrive and actually create jobs. And that is where, and another thing, it's around the quality of the education. So for me, it's a failure of government. They failed in that aspect, and therefore they have to continue to support people through the social welfare system.
Now, it's a fair point, Nomatibana. And you know what? I'm sort of hopping around several issues because there's just so much healthy debate and contributions from the chat as well as social media. I'm going to go back to the chat. Nadir, comment from Maile Rasekhotoma, and he says, Minister said there will be no tax increases, so we can have money in our pockets. How will our dying economy be resuscitated post-COVID-19 and high levels of unemployment, which poses danger to GDP? On the other hand, what are the implications of the IMF and World Bank has in our country? So I think we've done the second part of the question at sufficient length and depth, right? So let's perhaps maybe address the issue about the comment talks about a dying economy. How do we resuscitate the economy post-COVID-19? What are the levers we can pull? Just in a minute or two, because we are sort of, I am keeping my eye on the clock, and I'd like to address one or two more questions as well. So in a minute or two, your response, Nadir.
Okay, so a minute or two. So ultimately, the tax cuts hopefully increase consumption. The increased consumption has a multiplier effect through pulling up growth by the bootstraps in South Africa. That is, though, a short-term measure. Post-COVID, in terms of resuscitating our economy, at the end of the day, we have to get private sector investment. We have to remove bottlenecks to infrastructure in the economy. That deals with the infrastructure, public-private partnerships that we refer to, and the 100 billion rand that Treasury has set aside over a 10-year period. So we've got to remove the infrastructure bottlenecks to the economy. That will result in the private sector investing more into the economy, and with the private sector investing more, you create more employment, and by creating more employment, that's how you lift growth up by the bootstraps. So for the time being, it's really about creating policy certainty and unlocking investment from the private sector. That is how you resuscitate the economy long term. JSE corporates have been investing hundreds of billions of rands, if not trillions of rands, in offshore markets, because that's where they see the rate of return.
And we'd like to bring that back home.
We need to convince them, deploy your capital in South Africa, because that's where you can earn a rate of return, and that's how we resuscitate it.
Correct. Thank you, Nadir. Back to the sort of social media and Zoom chats. Nomatibana, comment from Bunga Jiba. The budget speech was good under these economic conditions, but the problem that I'm having is its monitoring. Also noticed that South Africa is becoming a social dependent state. I know we've touched on sort of the grants and social dependence and so forth, and we've got your views already, but perhaps maybe, I think the essence of this question lies in the monitoring, or perhaps making sure that the money that is used is fit for purpose and not being abused through corruption. Any comment from your side, Nomatibana?
I mean, the comment from my side is, if I look at it from a national treasury perspective, just understanding how exactly money flows out of national treasury. There's strict legislation in place that ensures that when money flows out of the national treasury, it's adequately monitored, it goes to the right departments, and even the departments needs to demonstrate, and this is the PFMA, the PFMA Act, they need to demonstrate progress on their project, etc. So the money coming out from the national treasury, that's strict. Obviously, the issues is really once it's out.
Yes.
And when it makes its way to the different departments and when it makes its way to the municipality, that's really where the monitoring needs to be bulked up, especially at municipalities. And I think it's quite important that the minister, or at national level, is starting to be more strict around municipal finances, because the poor state of these small municipalities, from a financial perspective, really in the long run has a risk factor to national treasury, because they will eventually come to national treasury with a begging bowl. So therefore, them being strict on how municipalities utilize that money, and I'm hoping, and the hope obviously is that there will be greater monitoring and how that money is spent. That's where more monitoring measures needs to be put in place.
100%. No, thank you, Nomatibana. I'm going to do one more comment from our chat and social media, and it's from Aaron Sewu. Nadir, perhaps maybe this might be well directed at you. The comment is how to balance between constrained fiscal envelope versus service delivery imperative and increased growth forecast for sustainable growth and development in the short to long term. So, I mean, again, it's talking specifically to your point about fiscal levers and fiscal measures and markers. How do we translate that into effective service delivery on the ground, both in the short and long term?
Yeah, so I think, the reality is that there's a lot of municipalities. So we're talking about fiscal sustainability, right? And there's a lot of, I think the number that the minister mentioned, I stand to be corrected, but is 175 out of 250 municipalities.
Almost 2/3, yeah.
Yeah, that is basically financially unstable. And so I think the reality is that in order for those municipalities to deliver their services, clearly they need to be financially sound. And in order for them to be financially sound, the people in the municipality need to be paying their rates and taxes. They need to be paying for their electricity. They need to be paying for their water, and they need to be paying for the services that they are consuming. And it goes down to that basic level. You can only get service delivery right if you've got municipalities that are financially sound. Correct. So, park aside corruption, because we've dealt with that extensively as well, and, that needs to be monitored, and there needs to be prosecution for corruption, and there needs to, people who are perpetrating corruption needs to know that the punishment is severe for their actions to prevent them from doing it.
Correct.
But I think in general, that comment is 100% right, that, we need to, they can't keep coming to National Treasury, and Nomatibane alluded to it. They can't keep coming to National Treasury with a begging bowl. National Treasury in and of itself has, much bigger fish to fry.
Correct.
There's 400 billion rand of Eskom debt. What do we do with this? And, but the reality is that the sad part is that lack of service delivery at municipal level does impact growth. So we have to get the municipalities on a financially more sound path, and that's a combination of tackling corruption, more efficient expenditure, and more efficient collection of revenue from these municipalities ultimately.
100%. Nari, very well put. I am wary of time. We've got 3 minutes left. I, with the permission of my two guests, I'd like to go perhaps maybe 10 minutes over time, if that's okay with you, Nadia and Nomatibana?
Yeah.
That's fine, because there's such a healthy amount of debate on the chat, and really I don't want to lose any of the essence that sits beneath this. I'm also just, I know my technical team is working very hard to get the results of the poll on my screen as well. And I'm hoping that will come through, just sort of, to give us an idea of what the polling results were. But let's head back into our comments and questions from the chats. Bryson Pather, hi Shaheem and panelists. To what extent will our junk status affect the unfolding of the budget, especially in terms of the future economic growth of the country? Nomatibana, maybe you want to take this one?
Sure. I mean, the rating agency, the importance of the rating agency is really about our cost of funding.
Yes.
So when there's been debate around whether we please rating agencies or not, it really needs to be summarized to the fact that it's about the cost of borrowing. While South Africa is running a budget deficit, that becomes important, because if we are at junk status, it impacts our cost of funding. And obviously, the higher the cost of funding, it makes its way into the overall debt numbers over time, and then it makes the problem even bigger. So our junk status currently, where it's impacting us, it's in the fact that structurally, we have international investors that from mandate restrictions, they're not able to buy our bonds because their mandates only restrict them to buy investment grade bonds.
Yes.
So these are typically the longer term investors, the big pension funds sitting in obviously outside of South Africa, and they are most strategic when it comes to their holdings. So when they buy your bonds, they buy them not for opportunities in and out. So you won't have this volatility in the rand. Also, they buy it from a more long-term strategic perspective. So and from a national treasury and planning perspective, it also gives them comfort to know that when they're planning their funding plans, we know that there's a set of funds that can buy our bonds. So therefore, we can project these numbers and project the cost of funding with more comfort. So therefore, that is where really the credit rating impacts the overall budget.
Correct. And I think, Nadir, Nomadibana has spoken very well in terms of rating agencies and their sort of role in the success and the health of the economy, to the point that we made very early on in today's discussion around perception. And the sort of, when you hear the news or you're watching TV and you hear that South Africa is facing another ratings downgrade, the perception amongst the layman on the street is to say, there's a lot of fear, anxiety, jobs might be lost, unemployment might increase, and so forth and so forth. And I think if you've got a 1 second response or view to elaborate on what Nomadibana has said.
Yeah. So think about it in terms of your own personal debt. I think that's the most relatable way to do it. If you go to the bank and you want to buy a house, and the bank says, we will fund you at prime, versus the bank saying, we will fund you at prime plus 2%, yes. Right? So if the bank's saying, we're going to fund you at prime plus 2%, more of your salary is going to service your debt, and less of your salary is able for you to go and eat out and, yes. To educate your children and to run your household, basically, right? So, and that's exactly the same in South Africa. Think about the rating agencies as saying to the market, you should be demanding, obviously these are not the actual levels, but you should be demanding prime plus 3% or prime plus 4% from South Africa, not prime plus 1%. So how it comes back to bite the end consumer in South Africa is that if the rating agencies take too negative a view in South Africa, it reduces the amount of the pie we can spend on other productive measures in the economy. And that's really the most relatable.
Thank you, Nadir. I think that really brings it into perspective quite clearly for us and for our viewers out there. I have got the results of our poll that we ran earlier, Nomadibana and Nadir. And to the first question, do you think that the finance minister has delivered a budget speech that will stimulate economic growth in the country? 56% of respondents, which is roughly about 51 people, had said that they're neutral, so they're not sure whether or not it actually will or won't. And I think there were some who disagreed and others who even strongly disagreed to the tune of 7%. I'll then go into the next I'm just at the wrong one, but I'll go to the second question as well, and that one is around the statement. Consider the following: a special wealth tax that should be imposed on the top 1% of richest South Africans, Nomadibana, and 42% of respondents on our poll agreed, and a further 24% of respondents on our poll strongly agreed that should actually take place. And I know that there might be a lot of people watching who might not be so happy to see that that's the sentiment. But I think it's important to really understand what that means. That people feel that the inequality in South Africa is a real issue. Nomadibana, anything from your side to add to or to comment on what sort of the results of the second question was?
I'm not surprised around the wealth tax, because really whenever we talk about increasing personal or taxes, from a political perspective, they always talk about the wealth numbers. But at the end of the day, I think if you look at how much would be collected if a wealth tax were to be introduced, it's really not one of the big numbers. Yes. So that would be my only comment there.
And again, I think such a strong theme of today's discussion is around perception, because people think that would actually make a really big difference. People think and feel that, it actually is a good idea. It might be a good idea from a token gesture point of view, perhaps, but to Nomadibana's point, it might not make a serious difference or a fundamental difference in the way that the economy operates, Nadir.
Yeah, so I mean, I'd like to pick up on another point altogether. I mean, both in the question 1 and question 2, it's a microcosm of the macrocosm in South Africa. Trust in government at the moment is very low.
Correct.
And that is the biggest issue that Minister Godongwana was facing today, is that the trust in government, in government's ability to be able to execute, is extremely low. So if I paint out a picture of how we're going to map out economic growth, I can spend the entire budget talking about that, and the reality is that we need to earn the credibility to be able to communicate that message for it to be well received.
Yes.
Or I can give the market something tangible that they can hold onto, like, for example, the budget deficit being cut by X amount,
Yes.
the budget, total debt being consolidated at that amount. And I think that's kind of a summary of why we got the budget we did, not focusing more on growth, is because the response to those questions tell you that
Tells the story in its own right.
South Africans are tired,
Yes.
and South Africans have lost a lot of confidence in the ability of government to be effectively managed.
Fully agreed, Nadir. Fully agreed. The last question on our poll was, how do you think unemployment should be addressed in South Africa? And there were 5 options. The option that participants felt would make the most impact was option number 1, which is investment in micro enterprises and entrepreneurship. And that was to the tune of 45% of participants. Another significant answer was that government should position South Africa as a tech hub. And that was 34% of participants who took part in the poll, who suggested, Nomatibana, that should be the way that we address unemployment. I think that we've got so much more on the chat, so much more on social media, which unfortunately we need to address offline because of time constraints. We've already sort of went over time, and I thank you for your indulgence in that particular respect. I'm gonna before I draw a formal close, I'd like to do a quick summary in a 1 or 2 liner, Nomatibana, no more than a minute. Your overall outtake, but more than your outtake, your hope and your sort of sentiment going forward in how this particular budget might be materialized and implemented.
Sure. So as I mentioned in the summary, that very little surprises from what we were expecting in the market. But I would say that there is implementation risk in this budget as previous budgets, in the sense that for instance, the COVID grant is only budgeted for this year, but they haven't extended it into the rest of the medium-term expenditure framework. So that is and also this introduction of, or cutting off, or the relief of taxes has been communicated as once-off elements. So we just need to be cognizant that there's so much implementation, still elements of implementation risk in this budget, and it's something that we just need to continue to monitor.
I think, Nomatibana, my sort of understanding of what you've said is cautious optimism with
Yes.
the necessary and requisite monitoring to make sure that what we've committed to is actually what we implement.
Correct.
Nomatibana, thank you. Nadir, same question to you. In no more than a minute, what is your hope for the operationalization of this particular budget, and how do you see the Minister of Finance actually implementing a meaningful change in the South African economy?
Yeah, so I think the first thing is get the low-lying fruit first, right? So the low-lying fruit was using the windfall to improve the fiscal metrics, and as Nomatibana mentioned, there's a couple of execution risks there. Make sure you navigate those execution risks as effectively as possible. In terms of the COVID grant being extended beyond the 1 year, that obviously is a medium-term kind of risk to the fiscal outlook. So I'd say from my side, get the basics right in terms of unlocking growth. More than the fiscal metrics, more than the debt metrics, get the basics right in terms of unlocking growth, and focus on getting those right so that we can at least get some level of growth going, because that's really our only hope. To get out of the situation we are in is to pull the entire economy up by the bootstraps by lifting economic growth. So get the basics right in terms of unlocking growth. Don't score own goals in terms of policies certainty. Don't score own goals in terms of corruption. Get some prosecutions done so that you create some sort of environment for unlocking investment, and try and encourage private sector investment to get growth going.
Nadir, thank you very much. The message that I'm hearing is getting back to basics, unlocking economic growth, making sure that our house is in order as a nation, and encouraging private sector involvement very closely with the government to drive that economic growth. And that, I think, is an opportune time for us to call time on today's event. I'd like to thank both of my guests, specifically Nomatibana in Cape Town. I know it's not easy to have this discussion remotely, but you've really sort of conducted yourself in such a professional manner, and you've really added so much value to the discussion. So I thank you really on behalf of everybody at Regent and everybody who's joined us both on Zoom as well as social media platforms across South Africa and beyond. Nomatibana, thank you very much.
Thank you so much for inviting me.
You're most welcome. Nadi, thank you to you as well for joining us on campus and in studio. We look forward to hosting both yourself and Nomatibana at future events going forward. And really, I think this could be just the beginning of some serious debate. We could have probably chatted another 2 hours about the budget speech without really exhausting even a fraction of what was required. But I will end it there. To all our viewers, to all our partners, both within Regent Business School and beyond, to everybody who's made today and this evening such a success, I thank you very much, and we look forward to hosting you at future events of a similar nature. Until then, thank you and good evening.